The Indian stock market witnessed a volatile trading session on February 1, 2025, as Finance Minister Nirmala Sitharaman presented the Union Budget 2025. The budget focused on fiscal prudence, infrastructure development, and boosting rural demand. Key highlights included increased infrastructure spending, tax incentives for manufacturing, and agricultural reforms aimed at doubling farmers' income. The market's initial reaction was mixed, with investors cautiously optimistic about the budget's potential impact on economic growth. The budget emphasized the government's commitment to fiscal consolidation, with a projected fiscal deficit target of insert projected fiscal deficit percentage here of GDP. Infrastructure development emerged as a key priority, with significant allocations for roads, railways, and affordable housing projects. The agricultural sector also received considerable attention, with measures aimed at enhancing productivity, improving market access for farmers, and promoting sustainable farming practices. The budget's impact on different sectors was a mixed bag. While sectors like infrastructure, automobiles, and consumer durables were expected to benefit from the government's focus on infrastructure development and rural consumption, others like information technology and pharmaceuticals faced uncertainty due to global economic headwinds. The market's overall reaction to the budget was one of cautious optimism, with investors closely watching the implementation of the announced measures. The benchmark indices, Sensex and Nifty 50, ended the budget day on a flat note, reflecting the market's cautious approach. The Sensex, after a volatile session, managed to close with a marginal gain of 0.01%, or 5.39 points, ending at 77,505.96. The Nifty 50, on the other hand, witnessed a slight dip of 0.11%, or 26.25 points, closing at 23,482.15. The choppy movement in the indices indicated the market's attempt to digest the budget proposals and their potential impact on corporate earnings and economic growth. The flat closing of the indices, despite the positive undertones of the budget, can be attributed to several factors. Firstly, global market uncertainties, including rising U.S. bond yields and the potential for further rate hikes by the Federal Reserve, weighed on investor sentiment. Secondly, the market had already factored in some of the budget expectations, leading to a muted response to certain announcements. Lastly, investors remained cautious and adopted a wait-and-see approach, preferring to assess the actual impact of the budget proposals on ground level before making significant investment decisions. The Budget 2025 announcements triggered a mixed reaction across different sectors of the Indian stock market. Some sectors like consumer durables, realty, and automobiles emerged as clear winners, buoyed by the government's focus on boosting rural demand and infrastructure development. Others, such as capital goods, power, and PSU, faced selling pressure due to concerns over fiscal consolidation and lack of any significant sector-specific incentives. The consumer durables sector rallied, with the Nifty Durable Index gaining over 3%, driven by expectations of increased consumer spending, particularly in rural areas, due to income tax relief and higher agricultural income. The realty sector also witnessed a surge, with the Nifty Realty Index rising by 3.3%, as investors cheered the government's continued focus on affordable housing and infrastructure development. The automobile sector, too, saw buying interest, with the Nifty Auto Index gaining 1.9%, as the budget's push towards rural infrastructure and electric vehicles fueled optimism. On the flip side, sectors like capital goods, power, and PSU faced headwinds. The Nifty Capital Goods Index declined by 2 to 3%, as investors remained concerned about the lack of any major announcements to boost private sector investment. The power sector also witnessed selling pressure, with the Nifty PSU Index dropping by 2 to 3%, as the government's focus on renewable energy and energy efficiency raised concerns about the profitability of traditional power generation companies. The Indian stock market's journey post-Budget 2025 is likely to be influenced by a confluence of domestic and global factors. While the budget's focus on infrastructure development, rural revitalization, and consumption-led growth has laid a positive foundation, external headwinds and geopolitical uncertainties continue to cast a shadow. Market analysts have expressed mixed opinions about the market's near-term trajectory. Some experts believe that the market may enter a consolidation phase, with investors digesting the budget proposals and awaiting further clarity on their implementation. Others opine that the positive undertones of the budget, coupled with strong corporate earnings and a revival in domestic demand, could propel the market to new highs. Global factors, including the trajectory of U.S. interest rates, crude oil prices, and geopolitical developments, will also play a crucial role in shaping market sentiment. The Reserve Bank of India's stance on interest rates, inflation outlook, and liquidity management will be closely watched by investors. Overall, the Indian stock market is likely to remain volatile in the near term, driven by a complex interplay of domestic and global factors. Investors are advised to stay cautious, focus on long-term investment horizons, and seek professional guidance before making any investment decisions.